to Canada Startup. I'm here, and we're doing something different tonight. So I'm going to start everything off. Welcome, Dave. Welcome, Justin. Great to see you guys.
Great to see you too.
Great to see you.
So tonight we're looking at market mania or crash coming. Okay, boys, I'm the rookie of this team, so let's hear what you got to say about that.
Well, the question is, are you investing or trading these days? And why don't we start off and ask Justin, what's been going on in the markets for you? Are you investing or trading these days?
Well, as the sort of crypto head of this call, definitely not a great time to really be doing much of either. So if I'm entering any positions, it is for a much shorter time frame. So I'd say I'm definitely trading right now. Lots of chop on Bitcoin, especially, and therefore the whole sort of crypto market. So I've got my orders set at the levels I want them, but other than that, I'm not really touching it.
Fantastic. We'll ask some more questions about Bitcoin. Bill, what have you been looking at in the markets, investing or trading?
Well, I actually made my first trade, I guess, this week. I sold my first couple of shares. I had a couple of BlackBerry shares, and I've been seeing all this stuff happening, but I do know the very basics that if you buy it at 10 and it's now worth 19, that's a good deal. So I sold off my couple of shares.
That's fantastic.
Excellent.
Congratulations again. And that's how it does start, especially with Wealthsimple. You can go and buy a couple of AMC or the meme stocks and have a price target. And when it hits it, you sell it and you make some money. And that's one of the scenarios of trading is be happy to make some money.
Yes, so definitely.
That's the trading component. The investing component, Bill, is you could also be looking at some of the shares right now for your longer term investment. You could be watching Disney. If it drops, you might buy some. If a bank drops, you might buy some, or you might regularly invest monthly or bi-monthly in picking a stock and do some dollar cost averaging. So
right.
That is definitely something that I'm encouraging people to enhance is in financial education, financial literacy, is to enjoy and be clear on the distinction of whether you are trading it or you're investing in it. It's probably one of the biggest mistakes that people make is they go into a trade, it goes the wrong way, and they throw it into their investment pool. And then their portfolio fills with a bunch of stuff that they don't really like.
Right on.
So trading does take a lot of discipline, and it's something to really put down your trade on paper and attempt to follow it and stick to perhaps stop losses or even selling and getting out of it if it goes against what your intended trade was.
Right on. So Dave, what's this meme stock thing? I just saw BlackBerry going crazy, but I know there's a story behind it for some stuff that's going on there. And I mean, like for us rookie guys, what the heck is that stuff?
Justin, you want to try to answer that question? What is a meme stock?
So yeah, I would say this year has definitely, with the rise of, I think, partly because of the rise of platforms like Robinhood and Wealthsimple, making trading and investing a lot easier for the retail, for the everyman. You have a lot of Gen Z sort of flooding into the stock market, looking to make a quick buck. And yeah, so in around January, everyone sort of, noticed the thing with GameStop, right? A bunch of people on Reddit noticed that GameStop was very heavily shorted by a lot of large hedge funds. And they were not happy with that. So they decided to buy a heck of a ton of GameStop to try to squeeze out the shorts. And well, to some extent it worked, right? GameStop shot up, it hit the mainstream news. Any investment news platform was sort of fixated on it for about a week or a month. And yeah, as you can see on the screen, you had these stocks that fundamentally probably, aren't hugely worth as much as the price would reflect, such as AMC, which is the cinema brand, GameStop, which is the video game retailer. stocks that, probably aren't worth the 50 or 15 to 50 odd billion dollars that their price reflected. So I think that those are two of the biggest meme stocks, and I think a good definition of a meme stock is anything where you have sort of a pool or a group of individual investors wanting to collectively pump a stock price.
Very good answer. It's a new term, Bill. So this is a new phenomena this year. Has really taken the retail investor, technically going after potentially the Wall Street traders and trading houses, and instead of allowing them short and make money when the price goes down, they're buying these stocks, they're rallying behind it, and they're giving them new life. And
right on.
GameStop and AMC are two examples that they were very close to bankruptcy, and they've been given a life preserver from the retail investor. Okay. And there are retail investors, but now there are institutional investors who are also taking advantage. So they're adding this real whippiness to the marketplace that is going crazy, that we are seeing stocks go up 20, 50, 100% in a day or two. When you expect to sell off, they're rallying the troops to buy more, force it up, force the stops out. And that's what's happening. And that's what stocks like your beloved BlackBerry is one of them that they've done that with.
Right on. Yeah, because I mean, like when I first saw this stuff and I was gathering a bit on it, I mean, the first thing that came to my mind is sort of like, if you're in Vegas at the beginning of the hockey season and they don't really understand too much of what the teams are all about, they give crazy odds on stuff that are usually giveaway games that you can pick up quick cash on. So that was the first thing I saw this as. But it sounds like it's a little bit more beneficial for a lot of people.
Well, again, the thing is, if it goes up and you're able to do what you did with BlackBerry and buy it at 10 and sell it at 19, that's great. But what's happening are a lot of people are leveraging and they're borrowing and they're going on margin, and they're not. They might not be able to afford it if it goes against and it corrects. So the whole idea there is that there's cheap leverage, cheap funding that's available in some of these new platforms, and people are over trading. Now that's where you're getting some people making tens of thousands, hundreds, millions of dollars, and you're also getting people who are getting margin calls, and perhaps they can't pay for that. And so the idea there is invest with what you can lose when you're playing in the meme market or in the crypto market. And that's one of the things that the regulators are very concerned about, is that people are doing trades that they don't understand the risks. Right. So that's what's happening. So let's go to Bitcoin. Let's get a little information from Justin, and we'd love to hear your analysis of the market. Just, it's a 40% correction. Is that the biggest correction you've seen, or have you seen bigger corrections?
Yeah, I think we had a similar conversation back in February, and I don't remember exactly what the percent on that is, but this is definitely something of similar magnitude for sure, right? Yeah, I think let's dive a little deeper into what's going on with Bitcoin and I guess the broader crypto market as a whole. If you look at like the right of your screen, you see all the prices of some of the cryptos that I'm following. You're seeing ETH at 2,500, Litecoin at 161, coins that were, maybe even like down a lot more than what Bitcoin is. So you're seeing a real pullback in the entire market. And yeah, so I guess the first thing is right there, right? When Bitcoin tumbles, everything tumbles. So everyone's got to keep a keen eye on Bitcoin. So what happened with Bitcoin? I would say that sort of from what I've sort of analyzed, there's sort of just a couple of sort of news events that happened along with sort of a more traditional sell-off, because Bitcoin was sort of, reaching new highs and money was flowing out of Bitcoin into altcoins. And so you had that, you couple that with, Tesla saying that we sold 10% of our Bitcoin, Tesla saying we're not going to accept Bitcoin as payments because of the ESG concerns. that's more environmental concerns with the mining of Bitcoin. And that's a pretty hot topic right now. So I'm guessing that probably shook out a few skeptics as well. And then you had some sort of more rumorish news in China about a lot of whales sort of selling and trying to flash crash the market. And then now you're sort of seeing over the last week or two, or last couple of weeks, this sort of ranging between this 42 to 30,000 range. And I'm not, so I'd say from the news side, those are sort of the things that are really driving the market right now. There are a couple bullish things, such as El Salvador, I think yesterday or 2 days ago, formally recognized Bitcoin as a currency. So you have news like that, but I would say if you're looking to sort of get into Bitcoin, you do want to keep an eye on some of the more technical analyses tools that a lot of traders like to use. One I'd like to mention right now is sort of this downtrend that we sort of see around here. So this means that every time the price has sort of tried to break above these levels, it's been rejected and it's been forced lower. So you can see that 1, 2, 3 times it's tried it. Maybe it'll try again for the 4th time, but I'd say stay cautious until we see a clean break of that. On the bottom end, you can also see something that would have looked like more of a wedge shape here, but you can see that clearly broke to the downside. So I'd say this sell-off over the last 24 hours might have been something to do with that. A lot of people trying to get out because they think that it's going to go a lot lower. So just sort of looking at those things, and there's also a couple key levels to look at if you are a trader. That sort of 31,000 level that we bounced off of today was something that you probably could have seen from previous levels. And then you got levels at 33, 35. That might be something of interest. But I'd say, if you're looking to figure out when the right time to buy is, it's never a great idea to trade in these sort of choppy waters. I'd definitely recommend waiting for a bullish break above that 40K level, or maybe even higher.
Very good. And when you say you've got your orders in, it means that if you have a breakdown to what, 26 or 24 or 20,000, you'll definitely buy. Is that how you're doing it, or are the platforms you're using, you can put an automatic order in, and if it hits it one touch, you're basically filled?
Yeah. So I haven't actually been able to check in like the last 24 hours, but typically, like what I saw is that if you look at the sort of order books, right? So if you look at where people have their orders, they do get pretty thin once you go below sort of that 30 or 28,000 dollar mark, which means that the price can move very quickly underneath there. So it might be really hard, if you want to buy your Bitcoin at 22 or 20K, you might get that opportunity, but you might only get it for, maybe a period of 3 minutes, and you don't know when that's going to be. So when I said I set my limit orders, is I have some buy orders at around that 25 down to 20K level, just in case something like that happens. Now, that is dangerous because it could obviously go lower, but for me, I would say I'm pretty confident that Bitcoin is in a better place than it was a couple years ago. A couple years ago when it hit 19K initially, I don't think it'll spend too much time below there. I think, just in the direction that we're seeing on a macroscopic level, I'm still pretty confident in Bitcoin and other blockchain technologies. So I'm happy to set my limits there. I think that those would be good entries. And yeah, like you sort of mentioned there, hopefully on the trading platforms that I'm using, once it does hit that price, the order should execute automatically.
Bill, any questions about Bitcoin? Yeah, please.
Yeah, actually, this is very interesting. So, Justin, is this sort of like when you place those orders, is it sort of like a set it and forget it with what you use? Or do you actually have to press a button to complete the transaction?
No, so yeah, I guess in that aspect, that's exactly what it is. It's so that you don't have to sit in front of your computer all day and wait for the number to hit that level. It helps you get more sleep. But yeah, I wouldn't say forget it, because maybe yeah, maybe Joe Biden will ban Bitcoin and then everything will go to shit. So don't forget it. But yeah, for the most part, you can set it, leave it, and trust that if it does hit those levels, you'll be a happy camper.
I got filled twice today, Bill, and I don't use a lot of orders yet.
Okay.
I've been trading options and putting your desired or my desired price and then going away for a half an hour. And both times today, it's not happened a lot to me, and they both got filled while I was away. And they got filled, like I set it at like $11, and then when I came back, it was like at $13.50. It was like, oh shucks. And so that can happen. So definitely, it is a nice way for you to, as you're starting some of your trading and your investing, you can put your day order in. I think that's mainly day orders, Justin, or do you put your week orders in or just day orders?
Yeah, I think it depends on the platform that you use. I know in the traditional stock market, a lot of them are day orders, right? Like they'll cancel at the end of the day. I think maybe it's a byproduct of crypto being 24 hours a day, but they actually, they'll stay up until you cancel them.
So would you like to share one or two of the ways for people to get involved in investing in crypto? Or again, I know I've asked you that a few questions times, yet it's probably pretty appropriate given that the market is changing. So what would you say is one or two, or actually my question was, what are 3 investments or trades that you're looking at or that perhaps our watchers today might take a look at for themselves?
Okay, yeah. So I guess if you're asking like what are a couple investments to be looking at, is I would definitely say you're mostly keeping your eye on Bitcoin and ETH. Again, Bitcoin's gonna drive the rally for the crypto market, and Ethereum's gonna drive the rally for altcoins. So I think you asked me what are maybe 3 tips in a more general sense for people looking to sort of get into the crypto market now, and I sort of maybe newer people who want to get in the crypto market now, because this could definitely be a pretty good opportunity to start to get involved, right? You're not buying it at 60K anymore. So I'd say the first tip is sort of like I mentioned, to just keep up to date with the news. A lot of the volatility recently, and honestly in the last 6 months or so, has been driven by news related events. I've seen people make bots so that when notable people tweet, they'll get an alert. I don't think you have to be that on top of it, but there are a couple of news sources that mainly focus on crypto, and if you just have one of them bookmarked, you can definitely catch trends when they happen. My next one is I would say for most people to have an investor mindset when it comes to the crypto market instead of a trader's mindset, unless you're experienced in the field. And when I say that, I also mean treat crypto like you're treating your entire treating a portfolio, not just treating crypto like you're treating an individual stock. And when I say that, I mean things like you can still have diversification within the crypto market, right? If someone's looking to really get into crypto, I don't think I'd ever suggest that they just go and put all their money into a Bitcoin or an Ethereum, because we have seen many events, and probably over the rest of the year, you're going to have different cryptocurrencies that outperform another one. I don't expect Bitcoin to be the leading performing cryptocurrency for 2021. Another thing to do with an investor mindset is to definitely look at, cost averaging, dollar cost averaging. Yeah. I think, one way to definitely get around choppy markets is to sort of indiscriminately throw in a little bit of money on a weekly or monthly basis, because with that, you're essentially betting that in the long term, these sort of dips will be, not as significant because of where the price is going. You're less likely to get shaken out. You're less likely to get scared over one or two, price fluctuations, which is something you definitely have to be ready for when you're entering the crypto market. And I think finally, my last thing is set out your targets clearly before you start. And I think the main one with that is figure out if you're gonna denominate all of your performances in dollars or Bitcoin, because I think that severely changes your mindset when approaching the crypto market. So for example, for me, when I look at the performance of my portfolio, I'm always tracking it relative to Bitcoin, right? For me, I would rather double my position in Bitcoin than double my position in US dollars. And I think that sort of comes back to that long-term outlook of if you can have twice as many Bitcoin in the long run, that's going to reward you much more than having twice as many dollars. When the whole market's up, you're going to be up in dollars. But if you're still down in Bitcoin, then you're underperforming the one primary cryptocurrency benchmark. It's like investing, or it's like being a portfolio manager and underperforming the S&P 500. But yeah, if you're looking at much shorter time frames, if you sort of want to get in and get out, then I say, denominating in dollars, just trying to double your purse and then get out and then put it into your TFSA or your RRSP, that's also completely fine. So yeah, I think those are my three big tips, especially in a period such as this, when we're pretty uncertain. Again, like just looking at the graph, the price could very much come up, retest, come back down, and then shoot up, or it could get rejected at one of the 35 levels, come down, and then make newer lows, right? Like we really can't tell. So I would say having that long-term mindset will serve a really big asset in not getting scared or not getting shaken out.
Thank you very much. That's very awesome. Useful. I'm going to give 2 or 3 ways for starters to get investing also, and that is in Canada, we've got something called BTCC. And Bill, I think you've invested in that. It's a exchange traded fund. You probably notice you're down 15-20% from where you invested.
It's down a bit, yeah. I had to buy more.
The idea that Justin had was if you put a little monthly investment into Bitcoin, you probably won't be that disappointed in 6 months, 12 months, 2 years, 5 years. It can be a comfortable investment amount, yet if you do it regularly, it is a good strategy for longer term investing. Dollar cost averaging, something like BTCC in the Canadian Stock Exchange. Again, this is not financial advice. This is for financial education. A next one that has been popular are investing in the miners, and the miners in Canada that I've been pretty involved with, BITF and Hut 8. These are miners that have good cash positions, have good production facilities. We're holding good balances. And right now they're down about 30, 40, 50%. And so I took a little nibble today and put a little bit more towards one. I actually looked at the financials and the outlook of all of the miners in Canada and came up with Hut 8 is the one that I sort of enjoy. And we'll look at holding more of that. Justin, any thoughts on miners? Oh, the ones in the States, by the way, are Riot, RIOT, and Mara, MARA. They have huge price differentials compared to the Canadian miners, mainly because the American market is so active. And so if the Canadian miners happen to go to the States, if they get registered on the New York Stock Exchange or the NASDAQ, we would expect them to go up significantly. Any thoughts on miners, Just?
Honestly, with miners, I still think the main thing and the main selling point for me is, just like long-term outlook. There's going to be a couple of things that are going to make mining more difficult. If energy prices rise, that's going to be bad for miners. If we really, if investors really start caring about the sort of environmental impact of Bitcoin mining, can you find one that's which Bitcoin miner has the highest use of renewable energy? And then, yeah, like what's their, like, Bitcoin mining is going to be something that, is going to be lucrative for quite a long time, but not forever, right? Eventually, Bitcoin mining is going to have to come to a stop. And then all those, what are they going to do with their hardware? Are they going to start, if they're going to start diversifying and start mining other major cryptocurrencies, they're going to want to start now, right? So yeah, but I think like you said, you probably have a handle on the sort of fundamental analysis side of that. But yeah, I have enough crypto exposure, like I usually say. So
it's true, and this is the thing that as you look around the room, Bill and I ought to have conservatively between 2 and 10% of our assets in Bitcoin, whereas Justin, given your age, you probably could have 60, 70, 80% in crypto. And hopefully 10, 20, 30% in other things, including some stocks, which we're going to move on to next. Actually, my third area. So first was going to be BTCC, which is an exchange traded fund. Second is a miner. Third is actually holding the coins. And right now I'm holding about a 50-50 spread of Ethereum and Bitcoin. And I'm holding it in a simple Wealth-Simple account. And then we have gone in and we've made some side investments in some funds that are being put together. Justin's been looking at that as one of his projects of managing money and opening a fund, closing a fund. And that's something that I believe if there was a 1 or 2 lessons from that experience, Justin, what might that be from managing a fund?
I think from so yeah, like just as like a little treat for the family. I'm helping them invest in some cryptocurrencies. I definitely think that when it came to sort of investing, not sort of on the behalf of others, it does make me more a little bit more cautious, but it makes me do my research more, and I do feel like every time I have an inkling, the conviction's pretty high. Whereas when I'm sort of doing it for myself, I'll throw money at random things just to sort of get that experience, which is I'm happy to do so. But yeah, I'd say the one thing is I remember coming to you and I was like, I think now's a good time to close the fund or to take some money out and and I at the time didn't really know why, but I just had this sort of nagging voice in my head that it's pretty high right now. And then I think like a day later is when everything started to crash. So yeah, I think conviction is still something that I'm developing and hoping to really get that experience with. But yeah, and say doing enough research so that when I do have those moments of conviction, I can be pretty confident in them.
Very good.
Justin, I have a question for you. When you were doing all your research and everything, what kind of offshoot industries did you find? Like we've talked to the miners, and obviously one of the big things that's happening with the whole crypto thing is the amount of energy. So there's, I'm sure there's talk about green stuff and all that. But have you found anybody like an offshoot industry that's maybe working on a new way? Maybe new equipment, more efficient equipment, maybe a different energy source or something like that might be somebody to maybe do research on as a possible stock to invest in?
I think that's a really interesting and pretty loaded question. When like you ask, so are there companies really trying to work to develop better ways to mine these cryptocurrencies or looking into that? I'd say my first answer is hopefully. like that'd be great. And yeah, I think it has been a problem in the past where most of the Bitcoin miners are these sort of ASIC miners, I believe, that are all sort of built and manufactured in China, I want to say.
Okay.
But they've developed these models, and everyone sort of just uses that. And these Bitcoin mining companies aren't really companies that manufacture their own miners. They sort of just buy the miners and then build these massive sort of factories where they just have like tens of thousands of computers all mining Bitcoin at the same time. I'd say like one interesting thing is if you have a look at Ethereum. So the way Ethereum's been mined since its sort of inception back in 2011, 2012, has been similar to Bitcoin, right? You have all these computers, sort of running, and the way you sort of validate new Bitcoin, so to speak, is based off of how much computing power you use. And that's sort of been the greatest success and flaw of Bitcoin is their way of making sure that people can't sort of fake multiple mining accounts. Is you have to generate electricity, you have to generate power. So it's sort of its own greatest success and its own greatest downfall. And Ethereum, after using that for many years, has sort of realized, okay, there's other ways to make sure that you can't scam the system like that. And one way to do that is you can have people hold a lot of Ethereum, and then because they hold a lot, we'll let them validate new transactions and mine Ethereum. And that's called proof of that's called proof of work versus proof of stake. I won't go too far into it, but Ethereum is actually switching their entire framework over from the Bitcoin proof of work to this new proof of stake, which doesn't require computing power. It only requires nodes to hold 32 Ethereum, and then they can validate new transactions. So that costs a lot less power. And there are other cryptocurrencies that are mined in a lot more efficient ways. I think Elon Musk actually, like jokingly or otherwise, tweeted that he's going to work closely with Dogecoin, the Dogecoin team, and because the way that Dogecoin transactions are processed and mined are about 99% less environmentally dangerous than Bitcoin's.
Right on.
Very cool.
That's awesome. That's very good. Thank you.
Thank you. Have you looked at any memes or any meme stocks of interest to you at all, Justin?
I mean, if you think the stock market meme industry is crazy, you don't know the cryptocurrency meme stock space. I'd say there's, so you had Dogecoin, and then everyone was like, well, Dogecoin is a dog-based cryptocurrency that's worth 50 billion. Surely the second largest dog-related cryptocurrency should be worth 8 or 9 billion. And that's exactly what happened to Shiba Inu token. So that one hit, a multi-billion-dollar market cap. And then there was a cryptocurrency called SafeMoon, which also hit a multi-billion-dollar market cap. And then every variation of a name of a dog, safe, a moon, rocket, any permutation or combination of that has been made into a cryptocurrency. So yeah, and they're cryptocurrencies whose names are a bit too vulgar that even Elon Musk tweeted about. I won't say it, but I'm sure you could search that up and find it pretty easily. But even that's been taking off recently. So yeah, lots of meme coins, lots of meme stocks for sure.
Well, let me address this with Bill a little bit, because he was going to ask a little bit more about BlackBerry, since he's did a buy and a sell on BlackBerry, and I've had my I'm a fairly conservative investor, I would say. Yet when the SPACs started hitting, the Special Purpose Acquisition Corps, in January, February, I got quite involved in that. I allocated a certain amount of capital, and I got crushed. It was down 40, 50, 60, 70% on some of these Special Purpose Acquisition Corps. I then changed the strategy a little bit from going from long-term investing into buying what's called leaps. And leaps are options that have a 2-year maturity. And so what it does is it allows you to reduce the amount of capital you have sitting in a stock that has gone down so much, but it gives you a limited time to either moves or you're going to go to zero, which happens to be a trading activity. Well, I moved a number of the stocks that were down, and Clover was one of them. And so I moved from having about a couple hundred shares of Clover at about $8-10, and I moved it into a Leap, where I was able to buy the Leap at about $3. And so I was able to buy 3 options or 3 Leaps that mature in 2 years. Well, lo and behold, these Leaps have got some value now, because in the last 2 days it's gone up 100%. So the options go, and they're very levered, and they go up not 1 time, 2 times, 3 times, but today some of these options went up 20, 30 times.
Wow.
And so I even got into what's called covered calls, which is when you own the underlying. One of the ways you can do it, you can collect income, is by writing a covered call and collecting a little premium, but you give the right to the other person to buy the shares at a fixed price. Now, this is really getting a little bit sophisticated, and I don't know, Justin, if you've done much covered calls or naked calls, because naked calls is when you write the call, so someone can buy the shares from you and you agree to deliver them at a certain price. But if you don't have the shares, then you've got to go into the market and buy them back. And that's what's creating all of this volatility in the market. I had that experience happen in the last 2 days, because I bought some extra Clover so I could then write the covered calls, and I did it out of the money. So it was a high chance that it would expire without being executed. I sold these suckers at 85 cents. Less than a day and a half, they're trading at $15. So that is a risk that you have if it's naked. But if it's covered, what happens is that person can call the shares at $15. Today, it's now trading at $20.
Wow.
So that is the volatility. I don't know if I've explained it very clearly yet. I might have to do a separate options show. Yet that's been the incredible volatility that's been occurring in the Clover experience over the last 36 hours. And I was actually told today that somebody has bought, maturing next week, 400,000 options that is going to suggest that the market's going to go even crazier in the next few days.
Wow.
Justin, yeah, Bill, go ahead.
So with this stuff that's happening, okay, I got a couple things here I'm spinning with. So with this whole concept of what you're talking about, is it something you want to sort of keep close to yourself, or do you want to sort of share this, or does it benefit by sharing with your buddies to say, hey, I found this one. If we all buy it, it's going to pump it up, or something like that. Like, I'm unsure if you want to keep it in your back pocket and hide it from people because it's going to be a great deal, or do you go and share it, and does that make the deal even better?
That's what's happening, that Justin referred to as the Reddit crowd.
Okay.
Or Wall Street bets. These are platforms with people, tens of thousands of people. There are people right now on YouTube that are posting to their 100,000 followers, their 300,000 followers. They're telling that they're going to buy a share. They're rallying people to go buy it. Now, there's the risk that it's a pump and dump. And there's also a risk that you'll be held holding something when the whales have already started buying or selling, so you're on the wrong side of the deal. So when you hear this, I'm curious what Justin's view, because he's been raised in this. Like, when I first started trading 20 years ago, this used to be very close to insider trading, that if you were an insider and you let information out, your relatives, your friends could actually be arrested if you had information that was privy to the company. But these days, when you got people like Elon Musk tweeting, who's an insider, there's a real gray area. Now, if you're in the SEC, the Securities Exchange Commission, it's not gray. It's very black and white because they've written laws. However, is a tweet considered to be insider trading? Well, it is if they're actively buying Bitcoin and he's telling people they're no longer accepting Bitcoin and his treasury's buying Bitcoin. That could be considered to be countervening the SEC rules. So, Bill, on the one hand, for us to be talking about some of the hottest shares right now, that's being really encouraged. The retail market is doing that, and that is the world we're in right now. And that some people think it's unethical and not right. Other people are saying it's great because it's giving the retail investor opportunities to really move the markets. Justin, when you hear this, what's your opinion? Because this is really all you've known, right?
Yeah, I think Elon's definitely a gray area because he has so much influence and it's so immediate. And like I do think there is a gray area because I think no other point in history does someone have such easy access to so many people. And I definitely imagine that when these laws were written, that didn't exist, and you probably can't convince me that I think that they definitely should be updated. Like I remember Elon tweeted Bitcoin price Tesla stock overvalued IMO. I think the next day it dumped 10%. So and yeah, I mean, like he's been doing it with crypto, with Dogecoin, with these micro cap coins on a weekly basis. And is that insider trading? Because he's technically sharing that information with the public, right? Like, but yeah, and then you have the Reddit crowd. I think the Reddit crowd's a little more innocent. I think when he said when you buy these options, this is something you should be sharing with people. For me, if you search up Roaring Kitty's GME, so he was like the main GameStop guy. I think in December he posted that he had bought a crap ton of GameStop long calls expiring in a couple months, and then every week he'd update Reddit on how his balance is doing, and that I think really rallied everyone behind them because at one point his options that I think he paid like 15 or 50K for was worth $36 million, and that got to that. I think so there is that argument for sure.
So that is something, Bill, that people are talking their book. People are sharing their book because if they've bought it at $10 and they can get everyone they know or is following them to buy it, and it goes to 15. They can either take some profits or they can double it up and they can let it ride, and they can buy options and they can buy out of the money options, which are called lottery tickets. So these are ways to create leverage. I'm going to circle back to the original comment is when you're investing, you invest for the longer term. When you're trading, you are looking to buy and sell or sell and buy back. This is ways that you can do it. Only please invest what you can afford to lose, or invest or trade what you can afford to lose. I'm going to finish it up today by just asking, what is perhaps a trade that you're going to look at in the next week, something that you might be interested in? I'll share a couple of the other memes that are hot and in season right now for you to do a little research. And again, Bill, you might consider in Wealthsimple putting a couple of dollars in. I do know people right now buying a couple of shares of AMC or GameStop just to be involved in a little bit in it. And it does spruce up the day a little bit, but it's equivalent, or maybe it's better odds than perhaps buying lottery tickets.
Well, it seems that way.
So, Justin, any thought for a trade of the week?
Yeah, I was gonna share one I made, but my thing's not loading. But yeah, like when we talked about the covered called ETFs, just me and you a while ago, I got really interested in one trade I did a couple days ago was I sold my FIE and I bought some covered call ETFs. Just thought the financial, FIE was reaching a pretty, in my opinion, pretty overextended point. It's sort of been slowly climbing very consistently for the last year. So thought I'd move that, get back my 10% dividend because that one FIE was back at like 6%. So that's a trade I made in the stock market, in the crypto market.
Which covered, do you know which one you bought?
That's what I'm trying to find for you, but it doesn't look like
FPN?
On my Wealthsimple, I think it it let me buy BMO ones, and it let me buy a different company one. I think I bought the different company one, but it's covered calls on the tech industry.
QYLD?
No.
Okay. We might do a separate section on this, Bill, because this is a high yield ETFs, exchange traded funds, very similar to FIE that Justin was the one who introduced us to. That at that time it was giving about an 8% dividend, but because it's gone up, it's now got about a 6% dividend.
Okay.
There's a number of funds right now that are doing covered calls for the fund as a way to generate higher returns and give it to their investors on a monthly basis. And we're talking about 10%, 12%, 18% a month. And
wow.
so perhaps if any of our watchers or viewers would like to learn a little bit more about ways to get, when I started doing my own research into this, I was like shocked. And I thank Justin again for tipping us to FIE and then to the whole world of covered called ETFs that give very, very attractive monthly income.
No, that would be very interesting.
Oh, sorry. I was just gonna finish off. It's TXF.
TFF.
TXF.
Thank you very much. TXF. And Bill, what might you do in the next week?
I'm thinking more of just getting more of our dividend stocks, like an Enbridge, something like that. Maybe I know the FIE went down a bit, so maybe getting a bit more of that sort of thing. But yeah, looking at increasing the amount of dividend stocks I have.
All right. Let me give you a name then. Check out TXF that Justin just mentioned. Another one might be GDV, which I believe is giving 9% monthly.
Right on.
So those might be two to do a little bit of homework. And then anyone who's watching and they really want to have some flyers, again, this is to do some research. Check it out yourself. Wish, WISH, seems to be on fire. And CLOV, of course, CLOV, and then CLNE. These appear to be the next wave of what I've been observing from the people who are being encouraged to leave AMC and GameStop and move into these guys, because for the next month, these ones might be the ones that have the rally. So again, do your own due diligence. Only invest in what you can afford to lose. Yet it is a volatile and emotional market. Yet, as Justin has continued to show me, is that don't allow the emotion, the FOMO, to get carried away. Really be planning and be a little strategic when you put on your trades or your investments. Any last words or thoughts, Justin?
No, I think we should do we should definitely do a series on yields and dividends, because yields are all the rage in crypto as well. So I definitely see a good one there. But no, yeah, that's all.
All right. And Bill, any last thoughts or questions as we bring it to a close today?
This was I really enjoyed it today. Thanks, Justin. Thanks, Dave. I got a lot of homework to do, so I'm really looking forward to it. Thanks, guys.
All right. Well, thank you, Justin. Thank you, Bill. This has been Canada Startup and Meetup. This is also being viewed on Lead Pedal Radio, weekly broadcasts on 24/7 radio, and also on Continual Shift on YouTube. Come check us out on Canada Startup Meetup or on Continual Shift on YouTube. Thank you very much, everyone. Have a great week and month ahead, and may the markets be with you.
Thanks, everybody. We'll see you next week.